Oh, right. This is Mackie's Retail Roundup Live. I'm Spencer Israel. That is Jeff Mackey from Mackie's Retail Roundup. Jeff, we have reached, I see here you say it's big game week. I thought it was Super Bowl week.
It's Super Bowl week. It's the Super Bowl of the Masters of the Talladega 500. It's
Oh,
big. It's
wow.
big. This is a big one.
Big week for you. Is this the
Yeah,
biggest week for retail ever?
probably. Probably.
Probably.
It's. We'll see. I mean, November retail's earnings are a little late in the year to do anything about it. So it depends on if Target announces a new CEO and shakes the very firmament of this entire industry,
Yeah.
then maybe it'll be the biggest ever. But they like to leave a little room for more.
All right. So first things first, let's just rip through some charts and then we'll talk about what is happening tomorrow and beyond tomorrow because it is a big week in Jeff land. But before we get to that,
Yeah.
here's the XRT, the retail ETF. It is at all-time highs. It didn't close at all-time highs, but it's
Didn't
more.
close there.
Yeah.
No, it's toying with it. It's thumping its
Okay.
little head up against those highs that we made back in the pre-tariff world before it. It's that was the. Are you serious about those tariffs? High that we had like January 31st. Turns out he was. Turns out, it's that was a real thing, and the XRT has not seen these levels since until today, very briefly. At which point, everyone there said, "Holy crap, that sell." Let's sell, but we're seeing great responses to sort of mediocre news, which you can argue about it, you can complain about it, but Home Depot came out today and was uninspiring. The shares are up 4%. We talked about those ripping, they're pricing in the rate cut, and they're just like, we're not going to wait for Jerome. We're fine. We don't need to hear from anybody at Jackson Hole. We're going to take it. We're going to take it up anyway because they came out with essentially the same quarter that Home Depot's been reporting for about the last 4 years, which are comps were flat. Sad trombone. Wah, wah. We managed to grind out kind of comp store sales about 1%. Revenues are down, customers aren't there, and housing projects almost everywhere in the world, Spencer, are getting kind of smaller. People aren't doing the big stuff. So that's a problem. There's other issues going on there, but it was a perfectly kind of fine quarter given what they had. But they're excited for a rate cut. If anyone has kind of a valid case to make for a rate cut, it's Home Depot and Lowe's, which have just been left for dead along with the rest of the building.
Yeah. So, what's the high level takeaway from this report? Is really just same old, pretty much, and it's not going to
It
change
it's the
until people
reaction
start.
of the stock. It's really the reaction of the stock.
Okay.
It's that people are just buying them up. They're buying the rate cut. I don't know that Home Depot gets absolutely poleaxed tomorrow, but it's this to me strikes me as a really good looking. It's a decent company working with kind of forces they can't contend with. Really,
Yeah.
it's a farmer with no rain whatsoever. They're just like we need the 30-year mortgage to come down and do us some favors here because there's just not a ton of building going on. Now they're seeing kind of smaller projects. They've been tapping into the professional level. Again, just doing smart company things, working their butt off. Lowe's, which reports in the morning, is more of a straight consumer tell. But if you look at these stocks of late, Lowe's and Home Depot, there they are, conveniently enough. That's like a 17% rally in the last month from a pretty morbid pair of stocks from these are not your Momo Go-Go type of names. Lowe's is more consumer focused, but if you look at them, they're just lockstep. Lowe's is up again today on Home Depot's reaction, really. No one's expecting great numbers. They're just expecting a rate cut.
Why do you say Lowe's is more consumer? Are these not identical companies?
Now, it's Home Depot really has made more inroads into the professional level, kind of wholesale industrial. We're going to sell it straight to the construction guys market.
Okay.
And Lowe's is much more of a I'm fixing my toilet this weekend,
Mm,
and I'm just going to I'm doing a little something around the house. I'm going to do a little gardening, and we'll
okay.
see. Yeah, and
Okay.
with the exception of course Home Depot's legendary Halloween decor,
Which we've
and if
discussed we've discussed
I can't get
previously.
enough of it. Because I'm so on the fence. I want to decorate. My wife's out of town. She gets back later this week. I'm thinking she would be excited if I had some holiday stuff up. I think she would like that. I think that'd be like a wonderland she would come home to. And I'll buy my stuff at Home Depot.
All right. Well, in any case, Wall Street treats these stocks the same, and as you kind of know, they're really doing the best they can with the hand they've been dealt. So, I guess we'll come back in a year, see where the interest rate on the 30-year mortgage is, see how new home sales are, and let that determine you know what we think of these companies because,
Where you
like you
go
said,
with, yeah, I mean, it's, they're just so rate cut dependent. They're like a warm up act. They're a warm up act for the big show that's coming tomorrow. We've got a lot more drama tomorrow. Home Depot is just a freaking metronome of we're doing fine. Viking, on the other hand, for the love of Thor, for the name of Leif Erikson, I mean, they can't literally make boats fast enough. They're selling high end, there's stuff that JC is eventually going to end up on when he gives into the fact that cruising is awesome. And that's effectively what this Viking, cruising is very good. The business is good. They're making river cruises. They're expanding into Egyptian rivers and things. I mean, it's nuts. It's really expensive. People can hate it, but they've sold out almost 60% of all their space for next year. Next year. So people are just buying their cruises for 26 already. Their biggest obstacle is just we can't build high-end cruise ships fast enough and stick them on enough rivers. It's bananas. Everyone's building cruise ships at this point. The stock's off a little bit today, but it's been a rocket. They didn't even take it public a couple of years ago, and it's up some 200% over the last year. I mean, it's the Viking is doing well. This is the year of the Viking, Minnesota Vikings, and apparently Viking cruises. Yeah, it's. I think people are selling a little bit because it's like, how much better can it get type of thinking. But it's Wall Street. People forget about that in about an hour.
I'm just looking at the chart here. So yeah, the IPO was May of last year, and looks like they
Right.
opened around $26. So we have more than double.
We've more than doubled. We've done pretty darn well.
Yeah.
Pretty darn well. And it's there's never been a time in history when the prevailing sentiment was we just need more cruise ships, damn it. Probably not since Charles Lindbergh has that been a thing where we need more ships. But so no one was begging for this a year ago in May. It seemed aggressive then. They're at the point now that if they really wanted to distribute money to shareholders, they kind of could. Which for the cruise industry, because they're just so heavily levered all the damn time, things are good. The tide is high, as they say.
I'm on Viking Cruise website now. They have an 87-day expedition to Antarctica for $75,000 if you're interested.
We're going to stop at another port with ice. There's more ice here, and there's where a guy froze to death. Yeah, I don't know. We took it to Alaska. It was honestly amazing. It was magical. So I'm sure the 87 days are much more fun than it seems. Maybe there's a dog sled involved. That would be fun. Who doesn't like dogs?
Yeah, 87 days. I like cruises, but maybe not for 87 days. All right, let's move on.
But I mean,
here.
they actually sell that stuff. The website is fascinating, right? I mean, it's glorious. I don't know how you're going to cruise past the pyramids. I have to get my sense of geography all adjusted, but that's fine. More power to them. These guys know the business pretty well, and they're growing at like 22% year over year, which is just nuts.
All right, Amer Sports here. Let's switch gears from cruises to sporting goods. I really don't know much about this company, but that's why I have you. So
we're not switching gears that hard. Yeah, go ahead.
They just reported. You say here that it was a beat and a raise, earnings beat, guidance raise. We like that. What's the stock doing? What's the reaction?
Kind of a sigh. Sort of, it's they expect it. This is more of a lateral move from Viking than it sounds like at first. Amer Sports is this really weird conglomerate that's owned mostly by the Chinese. It's based in Finland, and they own like Wilson Sports as well, but they own mostly really super kind of high end ski equipment. Pickleball. Do you like a little pickleball after you're skiing?
I do
Sure, you
like
do.
some pickleball. I'll be playing in a couple of weeks.
Really? Well, you might want to go out and get yourself a new racket, in which case you'll be dumping money straight into Amer Sports, whether you know it or not. Also, I wanted to point these guys out because I don't know if it's a coincidence. The head of Wilson, they own the Wilson gloves, baseball mitts and stuff. If you have one at home, it could be a Wilson, one of the few American brands they have. The CEO of the Wilson division left after 30 years, and also Wilson was hit with 145% tariffs. They actually accidentally sort of took delivery on something during that tiny little window where we mentioned the "Are you serious about tariff stuff?" and it turns out he was, but he wasn't really serious about keeping the Chinese tariffs at 150% or whatever they hit there momentarily. But Wilson was. They brought in a bunch of tennis apparel right there at the very peak tariff of all time. And the head of Wilson is going to pursue other activities, maybe pickleball. But it's despite that, this company's crushing. So again, you're just talking high end demand. You're talking super, super discretionary. You're playing later this week. Are you getting a new racket? Are you thinking to
No,
go out and
no,
buy
no.
yourself a new one?
I borrow.
Yeah. Well, there you go. You see, and so my point exactly. You'd have to be feeling pretty rosy about the economy to go out and buy yourself your own pickleball gear, just because. Geez, there's kind of a man hurdle you got to get over there, and it's like, am I a pickleball guy now? Can I not run on a full-grown court like a man? I don't know. These are the questions you ask yourself. But they sell a lot of rackets, a lot of bats, but they're just absolutely huge overseas, and just the impossible. Like, if you ever woke up and thought, I don't think $1,000 is enough to spend on my ski jacket, you'd probably be going to an Amer Sports company to find a more expensive one, or Goose maybe.
So we're down a little bit today. Down what, 5% today? Is that the deal? I think that's the deal.
Yep.
But it's right there at the bottom of that range, though. That huge gap up from May, which I'm assuming was the last earnings report. It was this I guess in technical analysis land they call this an island, but it is right at the bottom of this island here today.
That's so if you're going to roll the dice, you
have an obvious out. Your obvious out is what, $35? I mean, your out is pretty much $1 below where we are now, right? So $35, $34.
Which is perfect. And again, it's how hard are they going to get kind of pummeled for really what was just a hell of a quarter. And it bodes well for Dick's. It's as you get these earnings in, even though this is not necessarily a stock that everyone's going to be whipping around, you pay attention to it because Dick's Sporting Goods is going to report. They do huge volume. That stock's near all-time highs again, finally clawing its way back after all of that tariff news. Yeah. This is a really good report for Dick's. If you're bullish on Dick's, this is fantastic. There's a reason that Dick's was standing out earlier today. It was up over 2% earlier. And it wasn't in the abstract, kind of a crappy day for stocks generally, but Dick's is doing pretty well, and in large part because they're all roads kind of lead to just a lot of stuff that these guys make is kind of the higher end version of what Dick's is selling.
All right, let's switch gears. Let's turn our attention, Jeff, to the future. It is a big week. It's a big week for you. A big week for retailer earnings and otherwise. So let's just start with what reports are to come in the next week or so. Well,
that's it. We can hit this tomorrow morning. Tomorrow morning's huge. That's the kickoff. It's the kickoff of the Super Bowl, of the Daytona 500, of the Masters. It's the most exciting moment in sports. Target is going to be just the sad Charlie Brown missing the kick. Target needs some help, Spencer. I'm not going to lie. This is a big moment for them. I'm a little worried. They announced 3 years ago that they were giving Brian Cornell an extension for another 3 years. That expires in September. So, there's a lot of replacement chatter. People are, if it was the Vatican, you'd be watching the smoke kind of come out of Target HQ there in Minneapolis. We'll see. They really kind of need to go to the outside. That 275 high was 2 or 3 years ago, and they are not earning much less than they were then. They're basically at about kind of 5 year ago levels in terms of what they're expected to earn for the year. The comps are going to be negative. They need to stop the bleeding. And this is a big moment for them, because if they come out with another just kind of miserable guide down, nothing's really going well, it's not hard to see the trend there. That trend is moving lower and to the right. And, there's no reason. It's trying to find support. People are trying to believe. It seems like it should be cheap. But if they just hire someone from within, Wall Street doesn't have a ton of respect for the people that are running that place right now. And I think that could be met with disapproval in the morning.
Here's the good news. But what you're saying is, you're telling me the bar is low. That's what you're telling me. You're telling me the bar is
spectacularly low.
Cool.
It's on the ground, and they're kind of just burying it, which I really think this is going to be, it's just hard to come up with a calm reaction to whatever they report, because if they miss, there's sense of urgency, even in this place, which is not famous for its really being all that fast about stuff. Cornell's probably been there a little bit longer than he needed to, and so this would be a great chance to move things along. but no one wants to see. They've just been walking in the dark for so long that the street would really like to see someone from the outside come in there and go a little scorched earth.
All right. What about TJX? This is the other one of the other big ones, right?
Yep, this is people ask what happened to Target. Well, TJX among other things, but it's these guys are the off price, meaning they buy the stuff that Target buys too much of, and then TJX will sell it to you at a ridiculous discount. We mentioned it before. They have the motto that they want every 10th hanger to contain an item that is irrationally low priced, which is awesome. I mean, just tattoo it right on my back in Latin. That just because that's the type of mantra that it takes for successful retail. They report tomorrow. They were a little soft in May, which is they've spent the last 3 months sort of fighting off that slide in the stock since then. You don't get a ton of dips on a stock like this. If you pull up the longer term chart, this has been a juggernaut, and for a reason. So it looks like a cup and handle kind of taking shape for me there. If you want to take a shot or at least just kind of buy something that you throw in a drawer for your kids, TJX is going to be the way to go.
What about
it's an exciting morning, man. It's an exciting morning.
What about this is just sort of setting the stage. So these are all tomorrow. Lowe's, Target, TJX all report tomorrow morning. So okay. So we got 3 big reports coming tomorrow morning. But that's not the only thing happening tomorrow. Jeff, tell us about what you're doing tomorrow afternoon.
It's going to be the birth of the Mackie consumer universe, the MCU, Spencer. Among things that we will be doing, there it is, the dawn of the MCU. And as you can see, it's exciting. It's epic. People are comparing it to many of your favorite films that you've probably seen over the years. But we're just going to we're doing a little spruce up. And we're starting with kind of reevaluating where retail stands in the universe. As we've talked about all the time, it's 70% of the economy, and it somehow is a non-beloved segment. To me, everything flows through the consumer, and we're going to start kind of elaborating on why that is, giving people some trade setups. It's been valuable for us so far, and we're going to be delivering the goods in a spruced up storefront. And yeah, it's exciting. We're excited.
Yeah. So if you're watching this video right now on YouTube, check out the link in the chat and description. If you're watching this video right now on Twitter, I am not going to go in and physically add this respond. Actually, no, I will. I'll respond to every tweet with the link. I will retweet this video with the link to join for tomorrow. It's going to be 2:00 Eastern time. Jeff will be so you're unveiling the I don't know if legally we're allowed to say MCU, but it is the Mackie consumer universe. So because here's the issue, right? And you actually pointed this out. If I can go back to slide 1 here, this is the XRT. Okay, this is the de facto retail, the largest retail ETF, right? But the largest holding is Kohl's, which makes no sense. Right?
No sense at all. Kohl's is not, in fact, America. America is not just a moldy smelling store in the Midwest someplace with an empty parking lot where people go to return their Amazon. That doesn't represent my world. And everything you look at, you can go to different ETFs and indices, but they don't reflect the actual reality of being consumer in America. And so we need a better way to keep score. We need a better way to keep score of what consumers are doing, what they're working with, what trends are they actively buying and selling. And if you do that, we've taken a few passes at kind of cutting through and determining which are the companies that really tell the story of America the way, say, the Dow Jones Industrial 30 attempts to do. Those stocks, the basket we came up with, well, the 21st century staples are making a new all-time high. We didn't reverse engineer it. We just came up with the best stocks that again, reflect the consumer reality out there in the world, which is not captured with Kohl's and certainly is not 20% Tesla or whatever a lot of these other ETFs and indexes are. They're basically broken. So we're going to rewrite them and kind of help people pick the right pool of stocks to go fishing in.
So Jeff will be unveiling all this tomorrow, 2:00 Eastern. Not going to be on YouTube, or maybe it'll be on YouTube eventually, but not tomorrow. Just be on our site, stockmarkettv.com. You can also email us if you want to know how to get the link. Just email questions at stockmarketmedia.com. The link is also in the description, or the email address is in the description on YouTube. It's going to be fun. It's going to be Jeff just, unveiling his indexes, how he looks at markets. I believe you'll also have some earnings analysis for us, and maybe
Tons
some
report
trade
cards. We're
war.
going to keep score. We'll have some trivial facts about Target. This will be their sixth CEO. See, that it's that kind of stuff you can't. What kind of price could you put on that type of awareness? I mean, but no, we're gonna try to make some money here, and
That's
that's
the
really the
point.
idea. Is if you're following the right stocks, you can pick it up in real time, and the trade is being ready in advance. Which we'll talk about some of the stuff that we've done in the past and what the
Some
operating vehicle looks like.
some trade war winners and losers, and then looking ahead to really the Q4 playbook, right? The rest of the year we are coming up on, believe it or not, the holiday shopping season. Jeff has the plan for
I
that,
do.
right? And what he's watching for specifically, what he wants these companies to say, what is just BS noise, because a lot of them just say noise, right? And so you just have to be able to know what is important and what is not
You
important.
got to
So,
cut through the crap. I've listened to
right.
4 conference calls this morning. There's only so many ways Home Depot can repackage the idea of our comps are flat. We're in year 5 of that, so I'm doing the hard work for people, Spencer, because
Yeah.
it's not that there's not a trade there. It's that most people just don't want to go and dig through it. So we're doing a lot of work for people. We're packaging it up, and again, just they got to know it's. I want to buy sporting goods. I'm looking for a name without a tariff impact. Well, that's Amer Sports. Ever heard of it? Nope. And that's fine, but turns out it's a great company and tells you a lot about what's going on in the rest of the retail world, and it puts it into context, and that's a rundown.
Yeah. All right. Tomorrow, 2 o'clock. Link in chat. Link in description. If you don't know where to go, email questions at stockmarketmedia.com. We'll make sure you have the link there. Totally free event. It's gonna be a blast, and I won't be there, but I'll be watching. I can assure you that. So Jeff, I'm looking forward to it.
All right, Spencer. Knowing you're out there, I'll put on my A game for you.
Thank you. See you guys.